I would suspect that next year, things are not going to look as happy as they look here in December of 2023. Since 2008, the debt everywhere has skyrocketed. Japan, everywhere. So the next problem has to be the worst in my lifetime because the debt is just unbelievable. And it's happening all over the world. And I don't see how the next problem cannot be the worst in my lifetime. Everybody should have some gold and silver. Let's say, if a crisis comes, you want to have gold and silver.
Late last year, we held an optimistic view regarding U.S. debt levels. However, since then, the fiscal standing of the United States has significantly worsened. Debt-to-GDP ratios have risen, debt servicing costs have increased, and the Congressional Budget Office's projected fiscal balances have shifted further into deficits. The U.S. now bears more debt, with higher costs and an accelerated accumulation rate. As of October 26, 2023, the U.S. federal debt, reported by the Treasury Department, has surged to $33.67 trillion, marking a $2.27 trillion increase since the temporary suspension of the $31.4 trillion debt ceiling on June 3, 2023. This ceiling is set to expire at the beginning of 2025, with projections suggesting a surpassing of $50 trillion in debt by 2030. The substantial, long-term fiscal deficits have been a primary factor behind the exponential growth of federal debt. 2 rounds of fiscal stimulus, totaling about $1.5 trillion, were implemented during the 2018 financial crisis. Subsequently, amid the COVID-19 pandemic, 6 rounds of fiscal stimulus policies amounting to nearly $5.7 trillion were introduced. Investment legend Jim Rogers expresses profound concern over the alarming surge in global debt since the 2008 financial crisis. He underscores that worldwide debt levels have reached unprecedented highs, posing a substantial risk of triggering a severe and widespread crisis. This apprehension isn't confined to specific countries. Even nations like China, previously characterized by minimal debt, now face heavy indebtedness. Jim sees that the mounting debt burden sets the stage for what he perceives as the most significant financial problem in his lifetime, such as the staggering global debt accumulation since 2008, deeming the situation unsustainable. He warns of potentially catastrophic consequences, such as an imminent banking crash, hyperinflation, and even the looming specter of bankruptcy for the United States. To safeguard against such crises, Jim ardently advocates for owning gold, citing the historical resilience of precious metals like gold and silver during economic turmoil. These metals have consistently retained their value, serving as a reliable form of financial security in times of profound uncertainty or severe economic upheaval. We will present clips from Jim Rogers' interview with SOAR Financially. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
I own gold, I own silver, I own precious metals. I have for many years. They're in the closet. Everybody should have some silver and gold under the bed, because if there's a problem, like all of us peasants know, when there's a serious catastrophe, you better have some gold and silver in the closet. So I do. But am I running out and buying gold or silver now? No, I'm mainly watching, because I certainly own enough of both of those. But everybody should have some gold and silver. Let's say, if a crisis comes, you want to have gold and silver. Main thing is I'm looking for the blow-off, if the blow-off is going to happen. Historically, that's the way these markets end. We have a blow-off at the end. And if that happens, it's going to lead to opportunities for short sellers or opportunities for some people. So I worry because, as I said before, it's the longest period in American history without a serious problem. So when the next problem comes, it's got to be very bad. Remember, 2008 was a problem because of too much debt. Look out the window. My gosh, the debt since 2009 has skyrocketed everywhere. Even China has a lot of debt now. China didn't have any debt 25 years ago, and so they could save the world in 2008. But now even China has a lot of debt. In Washington, Janet Yellen says, don't worry, we got it under control. We know what we're doing. We have figured out a way to solve all these problems. Now, Janet Yellen has degrees from 2 famous Ivy League universities, so if you believe her, wonderful. I happen not to believe her. I know we're going to have serious problems, partly exacerbated by Washington, but if you believe her, buy, buy, buy. Well, I mean, as I look out the window here, I don't see anything. I don't see stocks anywhere except a couple of countries I mentioned. I don't see bonds. I see bonds. I know bonds are a bubble. I don't see property. I guess there's some great property opportunities somewhere, but they're not widespread across the board. Kai, I wish I could see something. I'd like to look out the window and find something great. But unfortunately, out my window, I don't see these things right now. I'm looking. I certainly would like to find, but I cannot put all my money in Uzbekistan or agriculture. I remember 2008, and we had a big problem. Kai, since 2008, the debt everywhere has skyrocketed. Japan, everywhere. So the next problem has to be the worst in my lifetime because the debt is just unbelievable. And it's happening all over the world. And I don't see how the next problem cannot be the worst in my lifetime. I mean, I'm not sitting here trying to scare you. I'm just looking at facts. And I see all this debt everywhere. It's got to lead to big problems. When it all comes to an end, somebody's going to suffer. I hope I'm not one of them. Hope you're not. Hope your viewers are not. Well, the reason they're never clear is because they don't know what they're doing. They don't have a clue what's going on. And if they get it right, it's an accident. We've had a couple of good Fed chairmen in the past 100 years, but for the most part, they're bureaucrats and academics. They don't know what they're doing. Right. The U.S. printed staggering amounts of money. The central bank in Washington, I don't think any central bank has ever printed as much as they did. So, of course, things feel good right now. Well, the Japanese also have printed staggering amounts of money, probably more than they ever have before. So between Japan and America printing a lot of money, those are two gigantic economies with a lot of money being printed. A lot of people having a good time.
Ever since the Bank of Japan embarked on a significant bond market experiment in 2016, one of the foremost questions among investors has been how it would conclude. Central banks worldwide have employed bond buying programs, known as quantitative easing, to bolster economies for more than a decade. However, 7 years ago, the BOJ took a further step, imposing a strict limit on 10-year Japanese government bond, JGB, yields. Jim emphasizes the Bank of Japan's unique share purchasing strategy, signaling deliberate support for their financial markets. Backed by laws encouraging more investments, this move came amid a 35-year peak in Japan's stock market, highlighting the economy's prolonged stagnation. This historical fact alone vividly depicts the long-standing challenges facing the Japanese economy. Jim acknowledges China's recent struggles due to the pandemic and a burst real estate bubble. China's rapid economic expansion has heavily relied on substantial borrowing, resulting in a significant accumulation of debt approaching 300% of its GDP. The country has actively been transitioning its economy from reliance on exports and investment to a more balanced model that emphasizes domestic consumption and innovation. However, this transition has proven challenging, leading to reduced growth rates. Now let's return to the interview.
Bank of Japan has been buying shares. They've been passing laws to encourage people to invest. All of these things have happened before. And when they happen, especially if you have a depressed market, the Japanese market made its high 35 years ago. That's not a typo, 35 years ago. And now the Japanese bank, the central bank, is buying. The new tax laws are good for people who buy shares. No, there are reasons to think that Japan may go up. Now, Japan has horrible problems, guys. Japan's had a declining population for 15 years now. The debt is skyrocketing, as you point out. Now, Japan, unless something happens, there's not going to be a Japan in 50 years. China's had the virus, and they had a real estate bubble pop, a huge bubble pop. So China's had some problems, which is why the markets are down, which is why the economy has been slow. But most problems come to an end. I can see the end of the property bubble coming to an end. I think I can see some of the problems in the virus coming to an end. And if that's the case, China is not a bad place to invest because it's a huge economy and lots of people working very hard. Well, we usually have something that when we have a big recession or depression, something triggers it. But it's usually a lot of nothing. There's no one thing. I mean, the press talks about one thing, but these things accumulate over time. More and more small things turn into big things. And the next thing you know, it's on the evening news. And everybody says, oh my God, Lehman Brothers is bankrupt, but things were already going bad long before Lehman Brothers went bankrupt. If you look back at 2007, 2008, Iceland went bankrupt. If anybody knew, they didn't care. But it was one of the first steps along the way till eventually Lehman Brothers went bankrupt, and we all said, oh my gosh, look what just happened. But Bear Stearns had gone bankrupt a few months before, et cetera. These things don't happen with one day, with one event.
The mounting debt burdens, now reaching unprecedented highs worldwide, cast looming shadows over the stability of financial ecosystems. Precious metals like gold are expected to keep rising, supported by factors such as high consumer debt levels and a lack of trust in the government. How might escalating global debt impact our financial future? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.